Hello, everybody. Welcome to VRIC Media, your most trusted voice in metals and mining. My name is Jesse Day. We are bringing the VRIC to you each and every week with our series of expert online panels. And today we have David Morgan, founder of the Morgan Report and author of the Silver Manifesto, and Peter Krauth, author of The Great Silver Bull and the founder and publisher of Silver Stock Investor. We're going to be diving, of course, deep into the silver space today. Exciting times for the metal. Gentlemen, it's great to have you both back on the program.
Great to be here, Jesse, as always.
Thank you, Jesse, for inviting me.
Absolutely. Well, exciting times for silver, now over $41 an ounce, outperforming gold so far this year. To get back to previous all-time highs, we need to hit at least $200, and that's if using official government inflation statistics. Of course, much higher if we're talking about real inflation since that time in 1980. I wonder what both of your thoughts are on silver's recent price action here and what you think it could take for us to hit triple digit silver. Peter, I'll start with you.
Yeah, so thanks, Jesse. It's been pretty it's been quite a strong rally. There's no question about it. We've nearly doubled from the lows of I think it was February last year, somewhere close to 21, $22. Just fantastic rally, and more than due. But I think that you really do have a lot of market participants starting to realize, like the broader sector of participants are really realizing the potential of silver, the tightness of supply, the strength of demand, the robustness, especially on the industrial demand side. And then, as you always have that kicker of investment demand that ebbs and flows, but I think that really is starting to flow. It's interesting because when you speak to some bullion dealers, they will tell you that they're buying actually a lot more silver, investment silver, than they are selling. But the demand is coming from somewhere. And I think we've talked about this before, but you've got these big retailers like Costco and Walmart who are selling investment silver coins and bars and so on. And they perhaps are picking up a lot of that slack. But I mean, we've seen this consolidation. We had this surge for a little while in 2016, and then when COVID hit, silver went crazy, and we had this big step change. And about 15 years ago, in a former occupation related to this, I called silver the gold price chart, the golden staircase. And frankly, we're starting to see the same sort of thing happen with silver, where you've got this, extended period where it consolidates at a certain level, and then it breaks out and then consolidates at this new higher level, and you see this happening over and over. And these levels, these steps, this staircase, the steps can be different lengths, but it is what we're starting to see happen. And that the more obvious step, I think, if you go back about 10 years, ended in around 2020, and then the next one started then, and then we went from, say, the 30 to say 30-ish range. We stayed in that kind of 26 to 30-ish range as a high for that step, and have moved higher now. And will 40 hold as the next step? I don't know. I think it's very possible. But we are starting to see that play out. And, one last point, what will it take to get us to triple digits? Well, about a year and a half ago, I came out with a chart that showed how silver reacts in Fed rate cutting cycles. And it lags gold typically, not this time it looks like, but in the last three Fed rate cutting cycles, silver tended to bottom around halfway through the Fed rate cutting cycle and took off. And the average of those three previous times, if you cherry pick the bottom and the top of those silver rallies, which took a matter of a few months up to a year and a half, maybe almost 2 years in some cases, over 300% gains. So if you have the same kind of thing play out, and we are at, call it even $35 now, if you get a correction and you get this 300% gain, you're looking at triple digit silver. And I think it could happen in this cycle, frankly, over the next few years. I think we could absolutely see that happen.
And David, your thoughts on recent price action in silver above $40 an ounce, and if triple digit silver is a realistic price target, and what you think it could take to get us there?
Well, I'm probably the first one that put it in print. I think it was about 2003, and Get the Skinny on Silver Investing. I wrote that we would see $100 silver, so that's obviously triple digits, and that was back, several years ago, 22, 23 years ago. So I think three main bullet points here. One is the sustained deficit in the physical supply, because the physical market is going to have to take over the paper paradigm. And it has at times, but it's been in fits and spurts. In other words, it's gone to where the spreads have been extremely high on the retail side, where we had a shortage or a squeeze. But that was only part of the market. The retail side is important, but it's not the total picture. So supply deficits eat from both sides, from investment demand, be it retail or institutional, and industrial demand. Second one is investment flows. They've got to shift from paper promises into real metal. And that has taken place for really decades. Again, on the retail side, the institutions have been a bit remiss to get in the silver market as they have in times past. That's changing. I know we have other questions, and I know what they are, so we'll be talking about a little more about that. But I think what you see, more institutional demand for monetary purposes outside of the industrial side, and the retail comes back into the market, which has been stagnant for quite some time now. In fact, there's really more sells than buys at the retail level. That will, of course, move the price higher. And the real one, that's why I would predict $100 silver, back when it was $5 or whatever. It's because of the loss in faith in fiat currencies on a world basis. This is what's going to put silver higher. It's going to be the margin, which is monetary demand, which ebbs and flows. When that strengthens, re-strengthens, and strengthens again, you're going to see triple digit. And if this is to occur, I'll say if, not when, but when it happens, I am going to lose some wealth, because I have said for years I will put a gathering together for silver bugs here in Spokane, where we started the Silver Summit so many years ago. And I'm not going to pay your airfare, but once you get to the event, it's going to be on me for a few hours. I'll probably have an open bar for like 4 hours. And when I keep drinking after that, I'll be on you. But I'll put out a spread when we hit $100 silver. So that's been a commitment I made years and years ago. And it looks like it could happen here.
Yeah, and we will all look forward to that party in Spokane. Now, I wonder what your thoughts are on some recent news coming out regarding the Saudi central bank purchasing nearly 1 million shares of the SLV ETF. Obviously, this is far different from stacking the physical metal, but a significant development, as until now, no central bank has been taking a stake in the silver market, aside from maybe Russia, who announced that they were starting to stockpile some strategic metals, silver, platinum, palladium among them. What do you make of this purchase? Is this more signal or noise in your view? And could we see other central banks eventually get involved in the silver market, Peter?
So I think it is more signal than noise. You know, uh, those are the only two, the Saudi and the Russian central banks. Interesting that they're arguably both part of the BRICS association, and to me, it just simply makes me ask if there are others that, and I think the answer is likely yes, but if there are others who've started to do the same thing, but have done it stealthily and are just not announcing it, and you know, wise or not, I don't know in terms of, not announcing it. But it just begs the question for me. I just can't. I have a hard time imagining that if these two have done it, and they're two of the probably larger ones in that part of the world, that there are not others who have started to do it as well, and for all kinds of reasons. Strategic is obvious, but both on the monetary side, but also on the industrial, and as well even on the military side. As David knows well, numbers are scarce when it comes to consumption for the military applications of silver, but it's just become so indispensable in electronics and in industrial applications, and so hard to imagine that's not the case very much so in military applications. And so nobody wants to be caught, lacking what it has now been proposed in the US, by the way, as a critical metal. Now, everybody's jumping to say it's a critical metal, but it's been put on the list to be considered. So we will have news over the next couple of months if it's, adopted officially. So let's be clear on that. But I think it's the first time that that's actually even been the case. So these are important developments, and like I say, hard to believe that there would only be the Saudis and the Russians who've started to accumulate silver. I think that the writing's on the wall in terms of its scarcity and necessity. So that's likely the case for others.
Timing's everything in this business. We've seen commodity prices really move up. The copper price, that started to move up strongly. We're not far off all-time highs, although you wouldn't know it from the junior sector and copper companies in general. But I think over the next year or two, we're going to see that really correct to the upside, and you're going to see a lot of money come into the sectors. Vizsla Copper, we're the team that brought you successes including ISO Energy and Vizsla Silver. If you want to learn more, you can find us at vizslacopper.com.
Yeah, and I think one of those would probably have to be China, especially since there's reports of representatives from China flying around the world and buying silver concentrate directly from miners, I think particularly in South America. So that's something interesting to note. David, your thoughts on this purchase of the SLV ETF by the Saudi Central Bank? And now they purchased nearly 1 million shares. So first, I'd love to get your thoughts. But secondly, is this a situation where they could stand for delivery at some point?
Well, certainly it's a big enough purchase. So I look at it right now as both. I think it's noise from the aspect of how much money the Saudis have.
Yeah.
But as far as in the bigger picture, it's a watershed moment. Until now, central banks, save Russia, haven't been buying silver at all. Saudis buying, as you said, 1 million shares. The SLV is not physical stacking, but it signals something more important. And that is now silver is on the radar of sovereign wealth. Central banks moved deliberately, so this could be the beginning of a trend. If others follow, let's say Turkey, India, or even China, we could see structural change in silver's demand profile, similar to what we've seen with gold over and over and over again. And a couple of things for the record on the critical metal. I think technically you're correct, Peter, but I did write an article on our blog at themorganreport.com on how the Silver Liberty program, it's referred to as Silver Eagle. I'm kind of a stickler for numbers, especially. That started from the strategic silver stockpile from the Defense Department. And at the time, the powers that be thought, oh, what's all the silver good for? It's taking up space. Let's sell it. And they wrote it into law in 1985, started the program in 1986. Strategic has a better connotation than critical, actually. Strategic is held for reasons of national security. And that has been pushed back on me by others. I'm not saying Peter, it wasn't Peter. I'll just leave it nameless for, let's say, gentleman purposes. But anyway, I just want to get that out there because there is some things. One thing I'll vent one more time. I say this over and over and over again. I don't know how many of my associates have said, the natural ratio of silver 16-1. It's not true. The highest ratio it's been through all of recorded history is 12-1, and now it's 7-1. So the 16-1 is the monetary aspect of silver. That was set by Sir Isaac Newton. That was 15.5 or 16-1. But mining-wise, it's 12-1, 10-1, 9-1, 8-1, now 7-1. So sorry for letting me, or sorry, I'm not going to be sorry for venting. I'm just, again, especially on the numbers side. And I'll leave it there, Jesse. But honestly, I'll repeat, this is a watershed moment. We see others start coming in and coming in size. You and I buying nearly 1 million shares of the SLV, that's huge, as an individual investor. I mean, who could do that? But from a sovereign wealth, it's hardly anything, which is interesting when you think about it. Because if they come in, and as I said earlier, they had enough to where they are an authorized participant and say, oh, that stuff we have called SLV, ship it over. That would be fun.
Yeah, absolutely. And I do think that's a great point in terms of the monetary versus the actual amount of silver versus gold that's brought out of the ground. Peter, you posted a very interesting visual chart on X recently, which showed the total silver deficit from 2020 to the first half of this year, 2025, as 796 million ounces. Now, walk us through the supply-demand imbalance and its potential implications. And then, David, I'd like to get your thoughts afterwards as well.
Yeah, so Jesse, I think one of the first important things to retain from that, so that's nearly 800 million ounces, and that's about equal to mine production, annual mine production. So the last, say, 5 years, if that was including 2025, which yeah, I was with including the forecast for 2025, then we're looking at 5 years of silver deficit equal to a full year's mine production. That's pretty stunning. It obviously doesn't include recycling, which is about another 180, 190 million ounces a year. But it's really quite telling. Now, what I want to point out is that if you look, so this started back in 2021, according to the Silver Institute, and that was the first year of a negative market balance, so a silver deficit. But interestingly, the way that they calculate and they display their numbers, they show investment in silver ETFs, which they call ETPs, exchange traded products, separately. If you include the money that flowed into those products in 2020, there was a huge shortfall that year. It was 280 million ounces. And I mean, I haven't done the math, but I have the numbers in front of me. And frankly, if you add that together, you're well over 1 billion ounces, as far as I can tell. If you look at that full number of the money that flowed into the ETF since then. Some years, some money had flowed out since then, but there was a really big year, 2020. It was 330 million ounces. And then you had a couple of years, 2022, 2023, where the money had flowed back out of the investment ETPs. Now, if you ask them for their explanation why they display these numbers separately, they say it's because, well, this is silver that's not consumed, and so therefore technically it's available to the market, and that's a good point. However, they do include, when they look at total demand, they do include coin and net bar as consumed silver, and yet that's available to go back to the market. So why is silver that's bought physically, invested in physically, included in demand, and yet silver that's bought, through silver ETFs not included? So I like to include it. Frankly, it's true that yes, both are available to come back, but we haven't seen much of it come back to the market. And if you look at the market balance for this year, just to give you some perspective, 2023, there was a deficit of 200 million ounces. Last year was a deficit of about 150 million ounces. And they're saying that that's going to drop off a little bit, but still stay substantial at about 117, 118 million ounces. So they're saying that there's an existing deficit. We're going to see that continue. By the way, they also predict we're going to continue to have deficits for the next 5 years, and that we're likely to reach a record at some point in the next 5 years. So that said, if you add back, which as I say, they show separately, but they do show all the numbers. If you add in what they forecast of investments into silver ETFs, this year is actually going to have the third highest overall silver deficit over the last decade. So it's quite interesting to see that, they're actually forecasting that investment into silver ETFs is going to grow this year by 14% over last year. And that's going to put us, as I say, into the third highest deficit overall. We've talked about this before. You've had comments from us, both of us, and as I recall, David's pretty much in agreement that it's true that there's plenty of silver out there, probably billions of ounces that are held privately, difficult to quantify, and that these can come back to market, and that's the argument. But I think, and again, I don't want to speak for David, but I think he agrees on this point that the question is always, yes, that can and likely will come back to market, but at what price? $40, I doubt it. We haven't seen that happen. 45, I still doubt it. 50, maybe. People are going to say, I've held on to this stuff for 30 or 40 years. Finally, despite the loss of purchasing power on the dollar that they get back for selling that silver. I just don't see it. I think it's going to have to be at much higher prices than that, and I think that's going to help to keep the market really quite tight along the way.
And David, your thoughts on the silver supply deficit and on Peter's comments there?
Yeah, I think Peter did a great job. I did an update with my members. I think I also did it once in the public domain, but I broke down the 3.6 billion ounces of silver that the Silver Institute says, is above ground, ready to go. Well, then it's so ready to go. That's the amount. I broke it down. Almost 2 billion ounces are in coins, which means government stamped, and 800 million of that 2 billion is in silver medallions or rounds, which are coins that are privately stamped. We call them medallions or rounds. There's 2 billion, so that's more than half of the 3.6. And then you get into the bar category. Well, the Silver Institute puts all bars together, so that's retail and commercial. Silver market is based on a paper market, as we all know, but the backing for the paper market is 1,000-ounce bars, not 100-ounce bars, not coins, not Britannias, not Eagles. It's 1,000-ounce bars. So if you take the 1.6 billion left and you subtract the retail bars, you get down to about 1.3 billion. It sounds like a lot of silver, certainly more than I have in my backyard, but 1.3 billion, about 600 million of that, or roughly half, is in the ETFs already. So that leaves you that 600 million-ish round number in the float. Everything else is in really, really tight hands. And I'll just back up what Peter said. Very few are going to sell at 40, a few at 45. And I think at 50, there are going to be some like, oh, it's never going to get above, especially if we see the futures market go to 50, 52, trade for 3 days, and then gets whacked down to, say, 47. Oh, I knew it can't get above 50. Some people give it up, sell it, whatever. But I think once you get above 50, it's a whole new ballgame. We can talk about that later. Point being is that the float is actually a lot tighter than it would appear. And it doesn't take much new buying, as I said in the last question, not by retail, which will come back in the market, but retail combined with the institutions. And backing Peter up, in 2020, there were 530 million ounces of silver bought total. 200 million was out of the retail side, which is kind of the high to above average amount on an annual basis. But 320 million of that was from institutions. I believe it was Scott Maynard from the Guggenheim Fund as their chief investment officer after speaking at Davos, better known as World Economic Forum, saying that silver was his go-to investment that year. Cannot prove it. It's conjecture, so you can take with that whatever you'd like, put a grain of salt next to it. Regardless, the numbers are there. And since then, it's backed off considerably. So again, I want to repeat, I think once you see institutional demand, which we talked about the Saudis and Russia and others follow into it, especially when you start seeing, pension funds, managed wealth, people that are in retirement and seeing the dollar destroyed further and further, saying, I got a hedge. The demand doesn't have to increase greatly to have a big move in silver because there's so much money out there looking for a safe, secure home, and the silver market is so pitifully small, especially when you consider the float being maybe 600 million ounces.
Well, I want to follow up on what you said there, that once we get above $50, it's a whole new ball game. Walk us through that. How does the silver market and the participation in the silver market change in your view once we break and remain above $50?
Well, on a general basis, for all commodities, round numbers are very important. So that's just the subset. But the idea that we're above 50 and most people say we can never get there, and we are there in reality, then what takes place is the algorithms. The algorithms look at a new high as a blue sky, as we say in the stock market. We blue skied that company. It's the sky's the limit, and it is, because the algorithms will say, well, who's going to sell? And most people that own it, even at 50, that have held on, was after, let's say, it washed out around that area for a couple of weeks, let's say, is conjecture. You come back to it and say, oh my goodness, any new buying with tight hands. Look at what happened with GameStop. Why did the shorts get buried? Because no one would sell. They were the hodlers. They just held on for dear life as the prices kept going up. So in order to buy back those shares, there weren't any for sale. So they had to bid higher and higher and higher to get somebody to give up a few shares. Same thing could happen in the silver market. And the industry doesn't have a choice. They've got to buy regardless of price. And since it's price inelastic on the demand side for industry in almost all cases, it doesn't matter if silver is $1, $10, $100, or $1,000. I'm just using this for exaggeration, but I want to make the point that even if silver is $1,000 an ounce, which I don't think we're going to get there, but if it were, and you're only using 0.1 ounce per product, it has so little to do with the overall end price of the product. It doesn't really matter. And most people don't really understand that, but that's how the market works in the industrial side when we're talking about how much silver is in a cell phone, how much silver is in a membrane switch, how much silver is in a flat screen TV, etc. Now, on the other side, would it curtail silver jewelry or silverware? Silverware is only 4% of the market. Jewelry, it actually might go opposite of what people think, because all of a sudden that silver jewelry is like, wow, man, this is actually worth something. You probably could get some sellbacks, but the point being is algorithms will kick in, industrial can't give up, retail will probably get let's say a reset, overused word, and say, oh my goodness, gosh, I sold it at 40, but I know it's going to 100, it's at 55, I'm getting back in. I'm buying at 55 because I know I can double my money, this month or next year, by next year, or whatever their thought process is. So I see a demand that's pent up demand that very few of us think about above 50, that right now is totally hypothetical. Could I be wrong? Could, but I know how markets move, especially the silver market. You got to remember, there's only one asset out there in the whole universe, to my well-studied opinion, that's more emotional than silver, and that's Bitcoin. So you've got still a lot of latent silver people that are holding still, given up on the market, and are waiting on the sidelines for the silver market to do something. And that something is trade above 50, and let's see what the heck happens.
Yeah, very well put. Peter, do you have any thoughts on what David's outlined there for the silver market above $50 an ounce?
I have not much to add. I mean, frankly, I agree with that. People will psychologically probably behave that way. Perhaps some will sell, like you said, and I had pointed out, recuperating after a long time and holding on to this, and not really believing at that point that it could go higher. And that's what you need. I mean, you need this, it could very quickly climb that wall of worry. And then the ones with conviction, and then the ones that want to jump on, we'll see, oh geez, it's true. We've broken that 50. What we've been told all this time has taken place, and it's holding it. And now, as David's example, it's now 55. That's already 10% higher. Geez, how much higher is it going? And given the context and so on at that point in time, I certainly agree. You could see a lot of participants start to jump in, and technical traders, all sorts of things. And it could really quite quickly run, who knows, to 70, 80 at that point. I've heard people who love investing / trading in silver, and have done well doing that because of the volatility. And I've said that, uncharted waters, above 50, you could quickly see a run to 70 or $80. So yeah, I mean, that kind of behavior would certainly not surprise me. And look forward to it. Bring it on.
Yeah, and I think that's interesting what you said, David, about Bitcoin being the only asset that's more emotional than silver. I think there's a lot of silver stackers, much like Bitcoin hodlers, who will never ever sell. It's almost like a bit of a spiritual or religious aspect to it. So I think we can count on those people to hold firm regardless of what occurs. I want to talk about manipulation because, David, you recently posted an article on LinkedIn outlining your case for precious metals manipulation. Could you walk us through the details and where you think we stand today when it comes to price manipulation of the metals? And then, Peter, I'll turn to you for your thoughts as well.
Yeah, well, I will direct everyone to either LinkedIn, which you can get from my website, themorganreport.com. There's icons up there for our YouTube channel, LinkedIn feed, and our Twitter or X. So I posted it on both X and Twitter and on my blog. So if you just go to the blog, you can see it there as well. I'm not going to read through the whole thing, but thank you for giving me the opportunity to talk about it further. So there are some good friends of mine that are on X, and one was saying, this very good friend of mine will debate anybody about silver manipulation. And I wrote the host back and I said, well, my premise is that the long-term trend cannot be manipulated, but within that trend, the price can be managed or manipulated. And on that basis, if you accept that basic premise of mine, I will take the debate. And he got back to me and I said, okay. So rather than do the, debate thing, which I'm okay at, I haven't done it in years. When I was in 8th grade, I was like good at it as an 8th grader. Come on. Anyway, the point is, I thought, I'll just lay out the case. And since I had been involved in a couple of these as they were being developed in the past and had a pretty big file at one time, I just set it out the way I would establish it if I was, let's say, an expert witness, for example. So I put that together and that's what I posted. And again, people could go and read it point by point. My main point is that we have established that it has taken place. It's called spoofing in the law, but there have been fines, there have been settlements, and there's even been jail time. My point is simple. Again, the long-term trend cannot be manipulated within the trend. Prices can be managed. The use of the jargon like spoofing by regulators downplays what is in fact fraud. The reality is that suppression has kept metals cheaper than they could be, which is ironically benefits long-term accumulators. But we're now at the point where physical tightness is overwhelming their paper games, and that's when manipulation fails.
And Peter, what are your thoughts on manipulation of the silver markets and just precious metals in general at this point in time?
No, I mean, I'm quite certain that you've got very, very similar things going on with gold, for example. I don't have a lot to add to what David said. I agree with all of it. And I've said the same things for a long time. You can push it around in the short term, but the long term trend cannot be manipulated. And I always go back to I guess best most difficult example to argue with, which is that if it's being manipulated so much, how did it get from $4 in 2001 to $40 today? So that's 10 times. I know it's taken, over 20 years, but that's still 10 times. And I believe it has much higher to go. So yeah, that's it. I agree with David, and he's laid out the case very well. And I agree. If people want, to understand it, the fine points of it better, that to go and read that article. It's very very well laid out.
Well, I'll put a link to that article in the description below so people can read through it. I want to talk about the silver mining sector because it's been on an absolute tear. The SIL ETF up over 90% year to date, completely obliterating the broad market and, of course, greatly outperforming the metal itself. With the supply deficits we've been discussing and a rising silver price, how much more upside do you think lays ahead for the silver mining sector, David?
As you said, SIV ETF's up over 90% this year. Silver is not even half that. Miners are highly leveraged to the price of silver, so when the metal moves, the equities explode higher. If silver does move toward triple digits, miners will have enormous upside ahead, and I believe that's the case. But caution is warranted. This is a volatile sector. The right companies with strong balance sheets and real production will vastly outperform the weaker names until we get to that panic manic mode. And when that happens, anything with silver in its name will run. I think that, for example, my business has been off considerably the last few years, which is a bit perplexing because every time we got a good silver and or gold rally in the past, I didn't have to do any advertising. People came back or new people joined. That's not the case right now, which is, again, a bit perplexing, especially I just got an update on my phone. One of our big investments just hit an all-time high today as we're talking. And I teach a different methodology than most in the business, and I put big money in big companies for safety. So, I mean, if you are a, let's say, substantial investor and you put money into the resource sector, primarily into the miners and precious metals, and we look at all things. We look at lithium, we look at cobalt, we look at all the asset classes in the resource sector, but gold and silver pretty much where it's at. Our uranium picks have done extremely well. Also, point being is that you really want to mitigate your risk, and you can do that by buying companies that produce the metal at a profit and continue to do so. So I'm really happy about what my portfolio looks like. I'm a little hesitant to scratch my head and say, why aren't more people participating, especially when, and people may or may not like me saying this, I'm going to stick to my basic, and that is before you move into the mining sector, you should have the real metal first. But if you really want to catch up to the people that bought silver at $5 or $4 and gold at below 1,000, the way to do it is buy these miners. They're still very cheap relative to the price of the metal, especially if we start to move higher from here. I mean, their bottom lines will be phenomenal. In fact, if we do what I expect to happen, and again, that's future forward-looking statement, who knows? But if it comes to fruition, the amount of cash flow that these gold companies and silver companies could generate could, like in the 1930s, spin off dividends that are phenomenal. If you bought Homestake Mine in the 30s because you couldn't own gold, but you could own a gold miner, both Dome Mines and Homestake just killed it. And with Homestake, if you held it about 3 years, your dividends brought you back to your initial cost. So in other words, if the stock was, I forget the numbers, but stock was $40. After 3 years, you had over $40, just an extraordinary dividend, let alone what the price of the stock did. I'm not saying it's going to be that lucrative, but what I am suggesting is that these companies have shareholders, and the shareholders own the company. And the company, when they have those kind of events, usually send the money back to the people that bought into the company.
Yeah, I love your approach. And I would take it a step further and say that before people invest in any equities, they should own some physical gold and silver first. That's the insurance policy. That's the foundation. Before you move on to trying to make money, first you want to protect what you already have. Whenever people ask me for advice about investing, that's what I lead with. And usually the conversation ends right there and then because they're like, well, I don't want to own a shiny rock. Most people don't get it, but I love that. Peter, your thoughts on the silver mining sector at present and the opportunity therein?
There is plenty of opportunity. There's no question that it was, in hindsight, it would, and David and I have been there for all this time and then some. But if you look back a year or a year and a half to when things bottomed in February of last year, that was when really the starter still was fired, and things have just gone crazy since then. That the easy money, in a sense, has been made, I would say, or this early on easy money has been made because you've got some names that have tripled. Some of them have tripled this year, especially in the juniors, and even better than that. But to David's point about the bigger, safer companies, it just one company was added, I believe it was last year. We took profits on selling half after it doubled, which was about a month ago. And then just today, again, actually, I sent out an alert to subscribers because a large silver producer that was added to the portfolio only 2 years ago doubled as of today. In fact, it's up 130, I think 6% from just over 2 years ago today. So we're taking profits on that as well, and keeping half as a core position for hopefully the rest of this cycle. But yes, I think there's plenty of juice, plenty of gas left in the tank. Are things overbought? They're certainly feeling, technically overbought, but maybe it's because, I've been around this too long. But I think things are feeling kind of overbought quite right now. Some kind of a correction would be very healthy. If you look at the RSI, which is a measure of overboughtness in stock prices, for the SIL, for SILJ, we're certainly there now. But what I can say too is in gold and silver, you can get overbought and stay overbought for quite some time. So unlike other, let's say, individual stocks or other indices that you might follow, this sector doesn't necessarily. I think it's because you have this FOMO aspect. People that have this fear of missing out, maybe perhaps in some ways, perhaps more than in other sectors. And so you can stay overbought for quite a while. But when the correction does finally come, it can be pretty violent. I'm not expecting anything sort of dramatic when the correction comes. But 10, 15, 20% would certainly not surprise me in the stocks, SIL, SILJ, and then see perhaps some kind of smallish consolidation. And I don't think the bottom will take too long to play out. Maybe a matter of weeks, months, a couple of months, and then it'll quickly turn around, I think, and then start to head higher again. So if anybody's patient, wants to wait for that kind of opportunity, probably not a bad idea, and that'd be a great chance to start putting some money to work. This is probably a good time to do some research, subscribe to some newsletters like David's, like mine, like others. Or if you feel like some lower risk, and you could just buy the ETFs. As I say, they're looking a little rich to me right now, but after some sort of correction, I think, I hate to say it in some ways, but I think the sky's the limit. We're technically likely headed much, much higher, I think, over the next several years, in the silver miners. And silver, at which I think is probably likely to happen at some point, maybe next year, for us to breach that $50 level. If you get that, and then you get the 60, 70, $80, it's almost mind-boggling to think what the silver miners will do at that point. This is a really, really small sector. It's actually, to some extent, gotten smaller, especially in the quality larger cap names. You've had 3 mergers in the last year or so, and I think we're going to get more of that activity continuing. And so it's a smallish space that's getting smaller. There are some names coming to the market that's more in the junior side, so people can watch for that. I do know of one larger company that is still private but likely to go public this fall. People should watch for that as well. It's likely going to be a go-to name, for quality of resource, the size, etc. But it is a small space overall, and so that's why I'm going to quote Doug Casey here, and he said, when you get silver running like crazy, it's like trying to push the contents of Hoover Dam through a garden hose. There's nowhere to run to. People are going to be buying the same names. Everyone's going to be buying the same names, and they're going to just explode higher. So place some bets early and be patient. That's how I see it.
Great analysis from both of you. David, tell us about the Morgan report and anywhere else you'd like to direct people online who want to see more of your work.
Well, Jesse, thank you again for inviting me. Peter, it's always fun to be with you. The main landing page, themorganreport.com. You can pretty much get everything on there. I do a lot for free still. So the blog is the first place to look, but I do a lot on X. Most of the postings there are me personally, but I do give access to my webmaster, and I think that's it. He and I. So the main point, I think, is just to put the precious metals in the proper context, which means money's important. Is silver and gold, but it doesn't have to make up your total portfolio. The main pushback I've gotten over the years has been they hear the story, and a hypothetical investor, but it's been many real investors over the year, and they get a little overexcited. They buy too much at the wrong time and not really do their due diligence. There is a kind of one size fits all, doesn't apply. It's individual, but generally speaking, 10% exposure is usually plenty for most people. And that way they can do what they wish with the other remaining amount of funds. Personally, I think we're in for a really big move up in the metals. But as Peter said, and I'm in the same thinking presently, that we're probably going to consolidate here, maybe get a pushback or two. Gold has broken out of the 3,500 level. I admit that it's a fact, but I just think it's going to go sideways again at a higher trading range than it has been, and it will consolidate at what I call a high level consolidation. Whether I'm right or wrong remains to be determined. You don't have to rush in right now. You heard a lot of bullish arguments from me, Peter, and you moderated a great one, Jesse, but put it in proper context. And no matter how interesting the economy gets from here, remember, we've always come out of them. We will again. And it's just basically a readjustment of reality. What's real and what isn't. We know that the commodity sector are real goods that are required for mankind. And a lot of the overvalued pieces of paper that represent ownership in a company are highly overvalued. So put that into your thinking.
Well said. I will put a link to the Morgan report as well as your X profile in the description below. Peter, tell us about Silver Stock Investor and anywhere else you'd like to direct people online.
So, Silver Stock Investor is the only paid newsletter that follows exclusively silver, and I cover the whole space except everything except talking about silver futures. So everything from silver-backed ETFs, silver mining ETFs, and then you've got your large cap royalties, large producers, mid-tier producers, developers, and then juniors, and all the way down to junior pre-discovery, junior explorers. So it covers the entire space, and gives you a great overview of the market. Some people subscribe just for the larger caps. Some people subscribe just for the juniors. That's up to you. You just need to know yourself and your risk tolerance. But so you can follow me and get to know more about the Silver Stock Investor newsletter. Just go to silverstockinvestor.com, or you can go to thegoldadvisor.com. I'm partnered with Jeff Clark, and he's the Gold Advisor. And on the same website, you have access to the two newsletters there, and you can find out more there. Otherwise, I'm pretty active on X. You can find me there. I'm on LinkedIn as well. And look forward to hearing from and continuing to put out some hopefully useful content for people.
Great. Well, I'll put links to all that in the description below as well. Gentlemen, as always, it's been an amazing conversation. Thank you so much for coming on the show.
Thank you.
Thanks so much, Jesse. Always a pleasure.